Okay, good morning, everyone, and you are very welcome to this morning's Coffee Microcaps morning meeting. We've got two companies out with their 4C results this morning. As you know, we're in the thick of it now with June 4Cs coming out left, right, and center. So I'm just going to quickly run through these intro slides and then we'll get straight into it with our first presenter. For anybody who's joining us for the first time, my name is Mark Tobin. I'm the founder of Coffee Microcaps, and you're very welcome. For all our regular attendees, welcome back to this morning's webinar. I do want to give a special mention to RAS Research Service, who is our virtual event sponsor here. If you are looking for some coverage of stocks in the small and microcap space, please do check out their website. They've got a free version, and they've also launched a subscription version now that you can join up to for some broader coverage and insights. Quick compliance and disclaimer slide, and as always, a very warm welcome to our friends from ASIC if they're joining us this morning. For anybody who is joining us for the first time, stocks we tend to have on here, capped under 300 million, that's our definition of a microcap, tend to be in revenue, approaching cash flow break even, or indeed already profitable. So we tend then not to have resources and biotechs on here. They don't kind of meet that second box. So what I like to call industrial microcaps, which kind of covers anything else from financial services, healthcare, technology, industrial businesses. This morning we got two companies presenting over the next hour, 30 minutes each, and we'll try and break that down into a roughly 20-minute preso and 10 minutes of Q&A. If you do have any questions for our presenters, please type them in the Q&A box. Might be under the more drop-down menu on your screen. And please note the webinar is being recorded and it'll be posted on the Coffee Microcaps YouTube channel on Monday morning. You can follow us Twitter. I'm still calling it that. I'm too old school to call it X. YouTube for this recording and all our previous ones. We've had a couple of interviews with fund managers of late leading into reporting season. So if you're looking for some stocks to keep an eye on as we move through the back end of July and into August, please check those out. And we'll have a few more companies presenting next week. LinkedIn you can guess, and there's also a monthly newsletter that generally goes out the first week of the month. Our first presenter this morning, I'm delighted to say we're welcoming back Dennison Hambling from Intelligent Monitoring Group. And then we will be welcoming back another regular presenter, Stephen Lydeamore, is going to be joining us from Melbourne from Immuron. And for anybody who happened to know us there, we did somehow manage to get two tickers right next to each other on the ASX, IMB and IMC. Funnily enough, out of the 2000, we managed to line that up. But I will line up our first presenter here now, Dennison Hambling from Intelligent Mining Room. Dennison, good morning.
Yeah, morning, Mark. Thanks, everyone.
I am going to stop sharing my screen, Dennison, and if you just want to pull up your presentation deck, I'll let you know once I can see it.
Right.
Yeah, it's just loading now, Dennison. Yeah, I can see the cover slide now, mate.
Great. Thank you, Mark. Well, I'll just kick off, and thanks everyone for your time. The goal today is just to move pretty quickly through a preso, go through the cash flows, a little update on the business, and then just go to questions. Obviously, our results have been released this morning. Before we kick in, just to remind everyone, what is IMG Group? IMB, the ticker. We are now the leading security monitoring and services company in Australasia. We've got a footprint that we've been building out rapidly, primarily under our ADT brand, around all of Australasia, from the top of Cape York to the bottom of Stewart Island. That gives us an incredible strategic reach and advantage as we look to penetrate both commercial enterprise security customers and also work independently with our security partners in the industry. Lots of businesses around the country looking to utilize our leading now technology. Over 200,000 customers, very recurring revenue business. I think over the course of this next season, full year results season, etc., we will start to really push into that and highlight the full nature of the recurring features of our business. About 599 employees with a really good balance and a great and supportive register, which I'm very thankful for, and thank everyone again for their time today. In terms of how we present, we're very clear. We've worked and thought a lot about the way our business works. You'll know the ADT brand. ADT is our direct-to-customer business. If you call me or our team, you want to be helped as a customer, be that a business, enterprise, family, individual, you'll be referred to the ADT brand. If you're a security industry player, you'll either deal with us in one of two ways. We'll either just be a provider of monitoring services, where we now have the leading monitoring platform in Australasia. We went A1R1 officially last week, which puts us as far as we're concerned, as the number one player, being that they are two rooms, both A1R1, operating for the same business. Or you will interact with us as the close partner, where we will offer some of our relative scale to you to help improve your profitability, to help us all grow our recurring revenue. So a very simple go-to-market strategy. ADT is obviously also in New Zealand, so Australia and New Zealand. Bound together by some really clear values. We are here to be the leading player in security services. We're going to achieve that by a set of values which are not trivial nor immaterial to me or the team. Our business is about transparency. It's about being able to work together in a team environment, and it's about aiming for excellence. We don't make any bones about it, and that is the bond that binds us all through the business, to which you're seeing the results of hopefully today, which we'll get into. So the 4C results preso, I think the big feature of this result, and there's probably three, but is the fact that it's very clean. So, we recognise that this journey we have had as we've been putting together the business and the platform and the investments and the migrations from JCI have lent to what, I've often been told are messy accounts. Understood, but it's taken us to this time for those to be fully clean. That started a year ago. We knocked all the capitalization out. This year is a completely clear P&L year for that, and it's now ceased with all the one-off costs, be they related to the refinance, the JCI transition, or the M&A costs, and you're seeing the result of that in this quarter with an operating cash flow of $17 million. Which, I think most would agree is an incredibly strong result. Underlying cash flow, therefore, if you're prepared to look through those prior quarter expenses of 32.4, up against an underlying EBITDA of 38.6. I think that'll be the one thing that people will look at, and I suppose whether disappointment's the right word or interest will be. The reality is we're pursuing and have attracted a lot of increasingly larger scale work to us. We had two pieces of work in particular that were affected at the customer level by staff changes at a senior level, which deferred them, which was disappointing. We had built a buffer in, but that sort of kicked it out, which just meant it hasn't fallen in this period. In our opinion, all this means is that the 26 year is now looking, stronger again from a growth point of view, but will actually pull us up to where we expect it to be. So, whilst we're sorry for it, it was outside our control, and we don't think it reflects anything other than just, building a pipeline of new customers and strong value. What I am really happy to point to, though, is that the underlying earnings growth, when you take out the acquisitions, you look at the business we had on a like-for-like basis, 24 to 25, it's grown 8.2%. I would make a comment that I think that is a conservative view of organic earnings growth. The reality is the businesses we acquired, in particular, I'm calling out Kobe and DVL being this year, have benefited from our ownership in that they've been able to win work that they may not have been otherwise able to win. So you could argue that's also organic, but we've exited that from this conversation, leaving us in very rude health. We finished the period with $24 million in cash and growing. We do have the acquisition facility available, from NAB, and terrific support from NAB, in the last year, and really thankful to have them on board with us as a key partner in our story and moving forward, which has put the board in the position of starting the process of considering capital management and what comes next. To facilitate that, we're announcing today that we are putting in place a buyback buyback mechanism. We've appointed Morgans as the manager to that. That is such that it will give us full flexibility as the cash builds to exercise, the reasonable use of that cash sensibly. And I think one of the things I've always said, I should note this is about the 3-year anniversary for me of being MD, is that the business is actually at a decision-making board level run by investors or investor mentality people. So capital use, return on capital, value of capital is highly regarded, understood in this business. And so we just want to start the process of, as we get, increasingly into rude health, to have the flexibility to put together some processes and plans and strategies around it. So that's really what that's about. Digging into the results a little more carefully here, I think the point of this chart, as you see, is operating cash flow in June of 17. It goes almost right the way down. So reported and underlying are basically the same. Less than $100,000 of M&A related sort of legal costs that fell in the period. Versus the $20 million of, essentially non-recurrent costs of the 3 quarters different. If you accept those non-recurring, as I say, you get to a $32.4 million actual underlying operating cash for the year. So, I guess the read is that as you look forward, this business is going to generate, as it has done this quarter, very strong cash flows. In terms of the actual quarter itself and calling out the lines of costs, probably only a couple of things to notice here. We did have a little bit of inventory draws, about $500,000 of inventory, I guess, down in this period. The 3 quarters prior, we'd made the point we are investing in the business and we're building inventory. We have bought in, new systems, to sell, that is, new product as part of a service. This quarter had the benefit of a little bit going the other way. We're lifting marketing, so we really are focused on growth. We spent a lot of time this quarter on our operational structure, our go-to-markets, hence the way I laid the brands out at the start of the prezzo. So marketing lifted, staff, admin, all pretty much in keeping with the scale of the business. And then obviously the net interest line, where you now see the benefit of the refinance really come through the business. So ultimately, what I would call out is the cash in the bank, and that grew, $11.1 million on the quarter. Difference, of course, being CapEx. The momentary comment on CapEx is at about $4 million. 75% of that relates to the 3G CapEx in New Zealand. Now, just to call it out and remind everyone, that is a different issue to what we dealt with a year ago when we talked about capitalisation, CapEx and 3G. In Australia, we were capitalising under accounting policies inherited from JCI and go to market. In the New Zealand case, and now with our accounts, we don't capitalise the expenditure. So this is CapEx into systems that we own, that we are effectively leasing back, which are largely medical systems. It will abate. This is about the peak. And roll off into next year. And I've called out there a number that will refine, further as we get into the financial year around the full year result, and then into AGM that CapEx is going to be less for this business than $10 million. And so between the operating cash flow to the cash in bank really is that CapEx piece of 4. Underlying business CapEx for IMG Group is really the same as the underlying depreciation, which is a $2 to $3 million number. And then you just have to add that medical business in New Zealand on top, which on a normalised basis outside the 3G rollover, the fleet sort of stay in business capital is about $4 million a year. So, ultimately we see CapEx, once we come out this 3G period for the wider business, falling to that sort of $7 million number. And then, any investment we need to make will only be, around building systems or IT or, comparative advantage outside obviously of M&A. So good story there. In terms of the EBITDA, we've pre-released that. I've made comment on it. We've broken it down. So effectively, this is just the bridge to show the underlying business growth. As I said, the reality is the acquisitions relatively outperformed, and the underlying growth relatively underperformed vis-a-vis what we thought would happen in our guidance. As I said, the relative underperformance, and it's a hard word to use because the underlying business is growing really strongly and feeling very confident, was just simply a timing issue. So, we feel very confident, and I just probably pause and make the comment, because this has been a sort of quarter-on-quarter story. As we exit this year, it puts us on a very strong basis looking into 26 for another big step up in EBITDA and therefore cash flow as we get into 26, just sort of sitting where we are today with the business. So, to wrap up the 4C comments, really this is the culmination of looking backwards over the last 3 years, and actually being able to now start to truly validate what we have been saying. And for those that have supported us for that time, we're incredibly grateful, and hopefully you feel validated yourselves in having backed us into what is a really strong business. As I've been saying for a while now, what we've really been focusing on in the last 6 months plus is how do we accelerate this and build a truly outstanding and enduring service business. The buyback I called out is really around options. Being in a position like this is great, and we want to make sure that we weigh all our options and make sure we really do continue to drive strong shareholder growth. I have made a comment about the earnings. Look, the reality is the earnings stepped up through the second half of or the year as it did through the first half. So, we're just saying, clearly, if you just look at the base of the second half, which, is a conservative view of the actual probably run rate, you would expect to see really good growth into 26. Our intention is to provide, we're going through internal budgeting. We really want to make sure we, do the work well, and plan this business well, not just for this year, but for the next 3 years, at this stage. And so our plan is to go through an internal round, which will shape out during September, with the view of providing full, guidance for FY26 at the AGM in October. We'll spend a lot of time, our plan at the result in August, targeted for the 26th of August, talking about our pipeline and showing you, why we're confident in what we're looking at, both currently and sitting with us, and then in future for the business. And then obviously the last point I make is with the balance sheet also in this shape, we've shown we feel a strong credentialed path to use M&A strategically around growing value, not just in the price we've paid, but the way we've integrated and the way we've brought this business together. I feel really great about that. That's always been my high watermark in terms of being very careful, selective, but prepared to make moves when they make sense for us on a medium-term basis. And so we're in a great shape to continue that journey. We would not need equity to pursue anything that we might be looking at the current time. And so you should expect us, selectively to continue to build this business with our capital or shareholders' capital over time. When you think about us, what really has come home to roost, I think the A1R1 certification, I think the conversations going around at the moment around the childcare sector and privacy and access to video and surveillance have highlighted both the advantage that we have developed by investing in the platform that we have today, but also the opportunity for us to widen that advantage over time. And so the best way I could really articulate what I think's happened in our journey and hope that you can see what we're doing and build it out is that, by investing as we did do 3 years ago in a very tough situation when we were overgeared, undercapitalized, and asked shareholders to help to support us invest in our platform, that has given us the leading platform. We've been able to invest now in building scale and reach, which is attracting large customers. It has put us at the forefront, I believe, of the industry, which is improving our business, which is the result you see today, which is now giving us the chance to continue to invest and build a comparative scale and advantage, which I think is going to create and continue to create a fabulous company. And I certainly feel that that's the environment internally in the business and understanding to which we have. So hopefully that makes sense to people. I'm happy to chat about that. I'll just finish. Again, what is IMG about? Really, this is a good showcase of, what what we can do in a purely physical level. And I'll just tell you the story here. So this is actually a Storage King. I won't note the location for customer privacy. We also won't be releasing this video publicly. This is for this forum only. But effectively, what you have here, there's a couple of people, which you can see on the screen, trying to get into the building. Now, at this stage, they've already been seen by our live monitoring team. In this case, the team was based out of Port Lincoln, and they did a threat assessment. So there are a couple of options for the team at this point for the operator. And, I'd like to thank Ben, Batman Ben, as we'll call him. Our operators that are successful become Batmen or Bat people. The assessment was, do I scare them away, which we have the ability to do with our technology now, or at least try to frighten them away and to distract them, or do I think that we can actually get them with the police before they're done or enact? In this case, the view was, let's just let them run and let's see if we can get the police there. So the police had already been alerted, and I'll play you the quick video. You probably can't hear it though. There's some loud shouting. So you won't have probably been able to hear that, but that's the police running after the guys shouting at them. They caught them off camera, and what I'm told is a superb state of origin-like tackle, and apprehended both of them. For us, since we started using this technology, since the start of the year, we've had 21 events when we've apprehended over 30 people with the police. Average police response time from somebody trying to get in to them getting there has been around 9 minutes. And so that's the difference. Anybody that questions why would I have monitored security, you're correct. If you're looking in the rear view mirror, maybe. I'd still argue there are cases and ways that it can be used to your advantage, but this is what we do today, and this is the opportunity we have. We think the market, we currently are the leaders for sure, and we think this is a multi-billion-dollar opportunity to apply across Australia as one of several segments of what we can now do with technology, which sort of validates the investment we made. So I'll draw a line there. I hope I haven't over-talked. Sorry. And I'll finish on the slide, which is the market stats, which I'll talk to another time. I'll leave it in the background, but throw to questions, Mark.
Cheers. Thanks, Dennison. Yeah, we've got a plethora of questions and we're not going to get to them all. So I'm just going to apologize to people now if I don't get to your question, but I will send them across to Dennison and Sheen and hopefully
Shanine, I'll call that out. Just in terms of, look, you've got our details, our phone numbers, feel free to reach out to Shanine and I, or Jason Biddle too, our CFO. We're all available to work you through the numbers as you'd like.
Okay, perfect. The first one I want to tackle the two deferred big service contracts. How confident are you that that is going to come back online once those new executive appointments get sorted on the other side at some stage, let's say in FY26?
Yeah, no, look, I guess nothing in life is for sure, but we're deeply the one that we've actually been really targeted on. One was a bit opportunistic, but fairly significant. There's been staff change that could take a little while. I think it just takes them kind of coming back to the table, which we've seen before in our journey. Certainly, we saw that with Reject Shop this year, where the takeover stopped them. We were just about ready to go and pick them up. Takeover came through. They canned and stopped doing everything. We thought that was gone and dusted. And then within a month, they were back. The new owners said, whilst we're changing this business completely and upending it, we do need a proper security. These are my words. Supplier across the country to do this for us and bring us up to spec on a global basis. We want you to push forward even though we're not doing anything else, and it came back to table. I think one of them's probably in that camp. The other one we're very live on, and I'd certainly look forward to updating people in August about where that is. And it's absolutely a meaningful contract, but it'll also be a real leading contract for the industry. For those in the industry that understand it and know that contract, it will really cement us as the leader in enterprise security, I believe.
Question on momentum in the video guarding as we head into FY26. Maybe just
Yep.
touch on the pipeline, Dennison, and any investment needed to meet demand, for the rollout of that.
Yeah, look, the investment at the moment is twofold. One is marketing. So you will note you'll start to see the ADT brand pop up a lot more than you've seen it. Certainly newspapers, banner ads. You'll see some editorial sort of content around the place. You'll probably see me a little bit pop up around it too. And I think that's all about starting to get the message out and for people to actually see. When people see what we can do, invariably they buy it. We've had an incredibly high uptake rate, but we have not gone wide with it. That process now is starting. The other side of it is we're very cognizant that notwithstanding our unique reach and scale on the technical base, we'll never be able to service what we think the demand is ourselves. And what I'm trying to avoid is coming back to the market and saying, wow, I've got a $50 million, $100 million pipeline in guarding I put together in the last 2 months. And then coming back 6 months later and goes, well, you delivered $5 million of revenue. What happened? And go, well, we just can't get around the work fast enough. So that's where our signature partners strategy is actually very, very important. For anyone based in Sydney, ASIAL conference is on back end of Sydney. It's the industry conference. We'll be launching our signature partnership brand with 20 trusted partners, and that's all about giving us low capital reach to drive guarding. So there's an investment in signature to answer the question, and there's an investment in marketing. There's no capex required though. It's all about operational investment to grow capacity and capability.
Okay. Got another one here, just clarifying some of the cash flow components. So one, operating cash flow benefit from a 500,000 inventory drawdown is one
Good,
part,
good,
and
good,
then
good, good question. I can answer it because I know where it's going. So there were 3 components, sorry, of probably just slightly positively abnormal. So whilst it's a clean result, there's business movement in the quarter. $1.3 million of income in advance from essentially a government contractor, or the New Zealand government, if I'm being blunt, paying up to June. It's a process they do. There was $500,000 of inventory, which I've called out already, benefit. But there's also the AASB card leasing benefit, where you moved the cost of that out of the operating cash to the financing cash line, which you'll see. And that had a $500,000 benefit in this result. So that 17 mil operating cash flow is probably $2.3 million positive from what you might call one-off factors that will normalize. Outside that, though, it's clean. Like, it's clean in terms of it's business as usual, no one-off costs out other than we've called out. It's what we would expect to reflect the business as it is on a steady state basis.
okay, and then the second part to that question, NZ4G, but I think they mean 3G. Are you basically saying investment will kind of wrapped up cease in relation to that by kind of the end of second half 26, basically by the end of FY26?
Yeah, that's right. So it profiles down. I mean, the challenge there is that it will go for as long as, well, it could go for as long as the networks keep the 3G network open, which is what we saw in Australia. So we don't control that, but in our estimation of it, you should see that number dropping, period on period and being gone. I think end of 26 is most likely. I could imagine a little tail, but I'm talking $500,000 maybe, into the second half of 26. Sorry, definitely gone in 26. First half coming down, probably gone in the second half. Might be a tail, is the way I'd put it.
Okay. We've got 3 or 4 questions around capital allocation, so I'm just going to consolidate them all into one, including one from a excited shareholder, it says here, from Canada. So I think one of our first Canadian attendees. Yeah, determining capital allocation, basically, I presume it's going to be on the board. table
Yeah.
when it comes to August and you're
But
getting actually the final result and all this budgeting.
uh,
But yeah, lots of questions around share buybacks, dividends
yeah,
versus acquisitions versus investing in the existing business. So maybe just expand on that slightly if we can, and we might wrap up there. That covers
no,
our four questions.
that's okay. So I'd probably refer everyone back to the equity raise slide that we did in, I think it was about September last year. And we actually put up our track record of acquisition and price and what we've paid and value sort of essentially created. And we seem to still be able to buy high quality businesses, and these are high quality, long-standing customer bases that endure, high quality staff, and that continue to grow. In fact, grow faster in our hands probably than priorly, for 3.5 times EBITDA. And I've been very clear, like I don't want to see creep. We're very disciplined around that when we discuss M&A. It's not a conversation around value for us on M&A, typically. So, whilst that's the case and it makes sense for us, as a shareholder myself, I still would preference us, growing and building scale. We're seeing the benefit of it. We're seeing customers come to us because of it. And it's giving us access to, increasingly, to more and more, equally good people and build this leadership. So I think capital allocation still at this stage has to be weighed up against our ability to deploy capital well. But that's not, whilst we have lots of opportunity, we've also got a high bar, and it's not just value, it's sustainability, it's executability, and as I've said, like I'm very, very clear. I'm not too worried if I'm never remembered, but I don't want to be remembered for blowing up a business because we've over acquired. So, it's all sort of weighed up against each other. I think the bigger point is, what we've felt now in this period is we might start generating way more cash than we can deploy, actually. And that period might come sooner than we thought. I think also I'm old enough to remember the 1987 crash. There are periods where you can wake up and all of a sudden, notwithstanding everyone loving what you do and all that sort of stuff, I personally remember buying a company in the GFC for 7.5% dividend yield, and it grew year on year, but the major shareholder had to exit because they just needed liquidity. I'd like the board and ourselves to be in the position to not have to wait a week, get advisors, try and put a buyback in place to be able to benefit should something like that happen. I'm not predicting it. I'm just saying, life's unpredictable. So I see it as costless insurance that we can use shareholders, and I include myself in that, but all of the people on this call who are shareholders, money, to maximize the opportunities that sit in front of us, and our intention is to do that firmly.
Okay. Again, apologies, we didn't get to all the questions, but I will
That's
send
like,
a copy of the questions to Dennison and he can tackle them. The fully results going to be out in a couple of weeks, so maybe in the updated preso I can weave some of those answers into that. Or as he said, please reach out to the team directly. Dennison, thank you very much for joining us this morning.
Thank you. Look, I appreciate it. Thank you, everyone, for your support and interest. I'd reflect, 3 years ago, I took over the company. We had an $11 million market cap, and we were geared over 6 times EBITDA. This quarter, it's really satisfying to have generated, the amount of cash in the bank as our market cap was, when this team started. This is an outwork of decisions made in the past. What we're focused on, though, is actually the inputs into what comes in front of us. And so, that's where our excitement is we genuinely feel like we're in a good space to hopefully build an enduring, really high quality, Australasia leader in our service and our space. So I appreciate the support and interest, and happy to follow up with people over the course of the next little while.
Okay, thanks, Dennison. And I know our second presenter here is waiting patiently in the wings, Mr. Stephen Lydeamore. Stephen, good morning.
Yeah, good morning. How are you?
Very well. Stephen, if you want to start sharing your presentation deck, I'll let you know once I can see it. And
Let me do that.
if it
Is that
comes, yeah, I can
sharing?
see that. Yeah, and if you want to just go to full screen mode on that, or slideshow mode. Yeah, there we go. That looks perfect, Stephen. You can take it away whenever you're ready.
Yeah, very good. And thank you, everybody. It's been a little while since I've spoken on Coffee Microcaps. I think the last time was back in March, and we've had a very, very busy period of time, and just reported annual sales, which was quite exciting for us. Being able to deliver on that projection that we put out there for the first time of the $7 million in revenue. We exceeded that, hitting the $7.3 million. And you recall stories of the past that the product itself was maximum 2.5 million in revenue pre-COVID. Went down to almost zero during that COVID period. And since I joined 3 years ago, instead of Travelland being a sideline activity for a drug development company, we've put resources and effort into marketing what is quite a unique product for prevention of travellers' diarrhea, and the results are starting to show for themselves. And this is just the beginning. So let's quickly get into this. So our FY25 results have not yet been completed auditing, so just safe harbour statement there. Quick update on the financial snapshot of the company. So Travelland is not the only product we have. We also sell Protectin in Australia, and we are a drug development company, and we have a number of clinical programs. So with Travelland itself, it's in a large study of 866 subjects being run by and funded by the US military. That has now been completed, and all of the US and UK military personnel have been randomised, deployed, and taken the drug, and they're currently in the process of doing data analysis, and we anticipate top-line data from that study in October of this year. So that's quite exciting for us. And you'll recall that we have Travelland Phase 2. That was a controlled human infection model study completed. We have not yet requested that end of Phase 2 meeting with the FDA. We're waiting on the results of the Uniformed Services University study, which is quite informative for the clinical trial protocol before requesting that meeting with the FDA. But we do anticipate doing that following those results. And IMM 529, which is for Clostridioides difficile infection, or CDI, or C. diff for short, we have a protocol ready to go. We're doing the last steps of preparing the IND, that's the investigational new drug filing, which we plan to submit hopefully with the FDA by the end of September. So you can see there's a lot of near-term milestones on the clinical pipeline, and no doubt there'll be an update on the first quarter of the new financial year, FY26, in around mid-October for those September sales results. So just repeating that there, you can see down there below, we completed the financial year at the end of June with $7.3 million in revenue, up 49% on the prior year. And not all of that growth is coming from Australia. Importantly for us, North America, so that's US and Canada. We had sales of $2 million, up 76% on the prior year. And given the larger population of people, we're seeing that as a great growth driver for the company moving forward. We continue to evaluate new international markets and also to add additional products to our portfolio. And you may have read that we have secured one such asset. We've licensed from a company in Sweden a product called Pro IBS for irritable bowel syndrome. We're working very hard on getting ready for launch of that. So the order for opening stock has been placed. We anticipate receiving that in the near term. We're planning on launch in the first quarter of next calendar year, but if possible, we will try to launch it for the Christmas period here in Australia. I thought this might be useful. Last time I presented a Coffee Microcaps was back in March 2025. So this is a comparison of what was the status back then to now. And back then I was reporting record sales for the half year of 4 million. And I've just told you that we've continued that growth and achieved record sales for the financial year just ending, 7.3 up 49%. We had submitted the phase 2 clinical study report to the FDA, and just inform you that we're waiting on the Uniformed Services University trial results before requesting the end of phase 2 meeting. I had reported that we'd finished recruitment, and just now we're reporting that all of those people have been randomised, deployed, and the quality review of the study data is initiated. So just again, top-line results anticipated in October. Back then we had IMM 529, we had that successful pre-IND meeting with the FDA, and updated dates for the milestones for this program. Submission by the end of September. We're hopeful that we could get FDA approval of that IND, which would allow us to start phase 2 studies by the end of this calendar year. We reported we started a new program in collaboration with the Monash University, IMM 986, for vancomycin-resistant enterococci. So this is quite a big problem for antimicrobial resistance in Australia, and hospitals in Australia are finding it difficult to treat patients that get this. We've manufactured colostrum using vaccines specifically developed targeting VRE, and at the moment we're in vitro method development before we commence preclinical studies. And that new distribution agreement for Pro-IBS, so just reiterating the dates there. So anticipated delivery of the stock in the third quarter of this calendar year, with a launch in the first quarter of 2026. But we are hopeful we may be able to launch late this calendar year. For those that are new to the Immuron story, let me just tell you a little bit about Travelan. So this is a $1 billion market, and just to be clear, that $1 billion market is at the moment primarily products which are used in treating traveller's diarrhea once somebody gets it. So think of products like Imodium or Gastrostop in Australia. That's loperamide, the generic drug name, and also rehydration salts and things like that. So that is a very large market. What we're trying to do is to convert the market from treatment to prevention, because we offer the ability to prevent you getting that in the first place, which when the frequency of getting traveller's diarrhea is anywhere from 30 to 70%, according to the Centers for Disease Control in the US, it's clear that if you're traveling, Australians traveling to Bali, or let's say Americans traveling to Mexico, the chances of you getting traveller's diarrhea are very high. And of course, that would ruin your holiday. So it's a small price to pay to invest in taking Travelan before, during your trip. It's a product that's based on a proprietary vaccine. So we have 2 vaccines, a multi-strain and a single strain that we inoculate cows, and they produce polyclonal antibodies, which are targeted specifically towards ETEC. So that's enterotoxigenic E. coli, which is the largest contributor to traveller's diarrhea. It also has the ability to impact on other bacteria, which are similar to E. coli in nature. And we've done numerous studies with different parts of the US military showing this is the effect. So it has a strong capability of preventing traveller's diarrhea. In clinical studies, we've shown up to 90% preventative effect. How does it work? So we have the ability to bind and neutralise to prevent. So I won't go through all the details there, but the slide deck will be available on our website. You can read more about how it works. It's quite a unique technology that no one else is using to create a product like Travelan at the moment. I like this graph, so I've talked to the numbers already, but in graphical form, you can see that FY24, the preceding financial year, was a great year for growth, and we reported record growth in sales during that year. But in the current year, not only have we increased sales, you can see the trajectory of the line there. It's at an increasing rate. So we're starting to get good traction. We continue to grow in Australia, which is our core market and the largest contributor to revenue. But the large population markets in North America are also starting to contribute significantly. So up to 2 million in revenue now for the financial year just completed, and a higher growth rate. And that's on the back of we had strong sales growth on Amazon.com in the US, and in Canada we secured distribution in 10 pharmacy and grocery retailers, and there's still plenty more to go on the in the Quebec type regions and also the Atlantic provinces. So we're working on that during this financial year. Just give you a picture snapshot of where we are. So in Australia, we're in essentially all pharmacy banner groups, and during FY25 we managed to get primary listings with multiple pharmacy chains. And in Canada, the system operates similarly to Australia. We have large banner groups. So Shoppers Drug Mart is the equivalent, if you like, of Chemist Warehouse in Australia, the largest banner group, and we have listings there. And you can see a number of the other groups as well. Unlike Australia, we're also in grocery. So Loblaws and Sobeys, they're grocery chains within Canada. And in Canada, unlike Australia, they also have pharmacies within these grocery chains. So good opportunity to take the knowledge and success that we've had in Australia and translate that into the Canadian market. US market's a little bit different in that, unlike Australia and Canada, that allow health claims on label, speaking about prevention of travellers' diarrhea, we're limited in what we can say in the US. So we do more of your social media marketing and targeting products in a different way. And we're doing that mostly through now Amazon.com and Walmart.com, but we do continue to sell product through Passport Health, which is the largest chain of travel clinics within America. We're quite pleased with the growth rates in both of those North American countries, and also pleased with the ability to continue to grow in double digits in Australia. How are we doing that? So this is a range of activities that we're going through. So you'd imagine in Australia and Canada, we have your typical retail focused promotion, but we also do a lot of in-store positioning and promotion. So we work with pharmacists and pharmacy assistants to make sure that they understand Travelan, how it works, what it's useful for, how to sell that to customers, because they're our, if you like, salespeople within the store. And it's not difficult to sell because there is no product like Travelan that has that ability to prevent travellers' diarrhea up to that 90% preventative effect that I talked about before. And in the US, we do this for Australia and Canada as well. We do a lot of social media marketing and targeting of advertisements. And if you happen to be Googling about travel to exotic locations or travellers' diarrhea or something like that, no doubt a Travelan advertisement will pop up on your screen talking about the benefits of taking it. Let's get back to our pipeline here. So I mentioned before that we have multiple assets in multiple clinical programs. The travellers' diarrhea market. So we're targeting to get Travelan, which is available over the counter now, approved as a medicine within the US market. And the potential market size for that, as estimated by Lumanity, a leading market evaluation firm in the US, is some $100 million in the US market alone. And the same company, Lumanity, has estimated a US market for C. diff of IMM 529 of $400 million. And this was revised up during the last financial year because we changed focus from a second-line therapy to primary therapy. So that successful pre-IND meeting that we had with the FDA was focused on a clinical trial protocol, which will be standard of care, so the antibiotic used for treating C. difficile versus standard of care plus IMM 529. So that's first-line primary therapy and a much larger opportunity. And this is one of our near-term milestones coming up. So I mentioned before that we're preparing for that IND submission. By the end of September is our best estimate at the moment, with a target to have that approved by the end of this calendar year, allowing us to go into phase 2 clinical studies next calendar year. And IMM 986 for vancomycin-resistant enterococci. We're in preclinical activities, and the first half of next calendar year is when we're anticipating the preclinical results. So that's in vitro, so that's in test tube, and in vivo, so in animals, data, hopefully demonstrating that our vaccines and the colostrum that we produce from it has resulted in a therapeutic asset that we can take forward into clinical studies. This is some details behind those numbers I just gave you before. The 100 million for IMM124E, the active drug substance in Travelan, and US $400 million for IMM529 for C. difficile infection. I won't labour upon these, but it gives you some data as to how those forecasts were derived. And down the bottom there, you can see where we're at. So IMM124E completed phase 2, preparing for phase 3. And IMM529 for CDI, we are anticipating IND approval, which will allow us to move into phase 2 in 2026. A little bit on IMM529 and why we're so excited about it. And this is a non-antibiotic, so it doesn't have that problem of antimicrobial resistance. First-line therapy is the target. And why do we think we should be successful? We have done animal studies, and the efficacy, the results from those studies are shown here below. We've shown that we can not only prevent, we can protect recurrence, so that's stopping it coming back. So just to be clear what that's about, when you treat with current primary care, which is antibiotics at the moment, quite often people get recurrence, which means it comes back, and that happens more than one time. And so with our product, non-antibiotic doesn't have that problem, and also has the ability to treat those recurrent patients. And we can also treat primary disease. So if our product was not used for prevention, and someone happens to get C. difficile infection, our product would be able to use to be treated. Now, these are animal studies, and we need to do human clinical studies to show that that translates in humans. But certainly in animals at this point, you can see statistically significant results showing prevention, protection, and treatment of primary disease for C. difficile infection. And this is achieved through a product which we believe is the first product which has multiple mechanisms of action. So it targets not only toxin B, which is the toxin that C. difficile uses to infect a host, but also spores and vegetative cells, which are part of how it works. And so we target all three things, which is probably why we got such great efficacy results in the clinical trials in animals that you saw here. This is a summary, if you like, of that phase 2 study for IMM124E, Travelan, in the controlled human infection model study. It was interesting in that the efficacy was high, but not as high as previous Travelan studies, which were done 3 times daily. This study was once daily, but notwithstanding that, we did have some success in showing statistically significant results in stopping diarrhea of any severity, and also less significant events. And so these results were very pleasing for the military, and they're also, along with us, looking forward to receiving the results of that Uniformed Services University study, which was twice daily dosing. This will give us a good idea as to what dose to take into phase 3. So you recall the original study is 3 times daily, up to 90% protective effect, once daily, around 40%. And we'll have twice daily dosing results from the USU study coming out in October, so not too far away now. And the plan for IMM124E, once we have that dose selection and that enter phase 2 meeting with the FDA, is to move into phase 3 trials. And each of those trials will take approximately 2 years, and that will result in a BLA submission and another 12 plus months for approval. And details of what that trial looks like are detailed below here. What we are hopeful of, though, is that when we get these Uniformed Services University study results, which is in a real-world setting, so a phase 3 like trial, it may be sufficient to get into the CDC Yellow Book guideline, which is what doctors look at when considering what to prescribe to their patients before they go on vacation to a high-risk region. And but even before we get FDA approval, if we can get into these guidelines, so CDC Yellow Book or potentially the International Society of Travel Medicine guidelines, that would open up a large part of the market in the US that we're not currently in. So in the US market, because we don't have label claims for prevention of travellers' diarrhoea, unlike Australia and Canada, we're limited to those patients that don't go and see a healthcare practitioner, that self-diagnose and seek treatments, and that's probably less than 25% of the market potential. So that's why we're quite excited about the results of this Uniformed Services University study coming out in October. Reiterating for upcoming milestones going forward, so we've got continued revenue growth and the growth drivers that I've mentioned already, and new product launch, hopefully before the end of this calendar year, but certainly in the first quarter of next calendar year. And we have clinical milestones coming up near term. So we have that September filing of the IND for IMM 529. We have the top line results of the Uniformed Services University study, that large 866 patient study in October as well. And we may have some other milestones related to IM 986, the VRE, vancomycin-resistant enterococci program, during the next 6 months or so as well. I might just pause there and open up for any particular questions. For those people that are technically minded, I have here on the screen in the back of our deck clickable links to all of the supporting publications. Doesn't include unpublished, of course, but publications where we've had peer-reviewed articles showing how Travelant and IMM 529 works.
Thanks, Steve. Yeah, we've got a couple of questions here, so I'm going to jump into them. Travelan revenue in the second half does not appear as good as the first half. What was behind that? Is there seasonality we should be thinking about between the two halves?
There certainly is seasonality, and it does vary by country. So there's peak travel periods. So in the US, for example, spring break is a big travel period. And similar to Australia, winter, when people travel to warmer locales, like Mexico or the Caribbean, are but winter, of course, occurs in a different time of year than it does in Australia. But the primary reason for the difference in sales is not to do with seasonality. It's to do with what I spoke about before. So during the last financial year in Canada, we obtained those listings with retailers, both pharmacy and grocery. And in Australia, we also got primary listings with a number of large pharmacy banner groups like Terry White Chemist, for example. And when you get new listings, wholesalers then stock up. So there's a wholesaler stocking period that occurs. That you get a lump of sales in, and they're the sales that we record. We record sales to wholesalers, but of course, consumers buy from wholesalers before they use. So there's a timing difference there, and that's the primary reason for the difference in sales from one period to the next. But what we focus on is not so much our sales out to wholesaler, but sales out of wholesalers to consumers, and we use IQVIA data for doing that. And what we've seen is strong period-on-period growth, steady growth in markets, showing Travelan continue to sell very, very well. And not on this slide deck, but I've shown previously that we've either been number one or number two SKU in Australia in that digestive health, diarrheal category, and we'll continue to aim to stay in that spot.
A question on IMM 986, the preclinical results. It says these were previously advised to be out in August 2025. People are just checking in. Is that still on track?
No, it's not on track. So preclinical studies, of course, there's a reason why it's called research and development. There's risks associated with development. So maybe I can just explain what's involved in developing a new asset such as this. So the way our technology works is we develop proprietary vaccines which are targeted to a specific pathogen. So in Travelan, that's E-Tech, so enterotoxigenic E. coli. For VRE, it's vancomycin-resistant enterococci. So we have completed the development of those vaccines. We have vaccinated cows. There's a period of time during which obviously a cow needs to go through its pregnancy period before it can produce colostrum. We've done that. We've produced that colostrum. There's assays that need to be developed before you can run your preclinical experiments. And we've had some challenges in getting the assays to be as robust as what we would like. So that's caused a bit of a delay in the program. So there's two types of assays. So we have ELISA assays and also Western blot. We're focusing on ELISA first, and then we'll do Western blot. And we'd like to complete both of those successfully before we move into animal studies. So instead of August for the initial in vitro preclinical data, it's likely to be. I didn't give a target timeline yet because we don't really know because we don't have those assays yet. But as soon as I do have an update on what that date is, we'll be providing that to the market. But it will be 2026 at some time.
Okay, great. Yeah, maybe the full year result comes out maybe in August. Things will be a bit clearer on that particular study. Question here on question here on funding in terms of whether that's further rollout of these studies, moving from one phase to the next phase, and expansion of Travelan, cash wise, in terms of, I know a lot of this stuff is funded by whether it's Uniform Services or there's other partners kind of helping to fund a lot of this research, but maybe just touch on and I know the 4C will probably be out in detail sometime next week, so maybe just touch on the need for funding moving forward, if any.
Sure. Let me just touch quickly on the 4C. So we're in a fortunate position where we don't have to report 4Cs, but we will have our annual results coming out, preliminary annual results out at the end of August, which will provide an update on cash as well as our full profit and loss and cash flow statements and the like. With regard to our cash position, we last reported at the end of December, and we had a bit over $7 million back then. Of course, we're burning a little cash, so we have a little bit less than that at the end of June. But with regard to raising capital, we have actually raised capital, and we did that via an at-the-market facility that we had in the US market. So when we reported our sales results, which were a record and significantly high double-digit sales growth, the US market reacted very positively. Significant volume of trading at prices exceeding those on the Australian market. We took advantage of that to place around $2 million of stock into NASDAQ, and that's provided us with sufficient funding to commence those IMM 529 clinical trials.
Yeah, perfect. Question on the top line results for the Travelan. Just wondering, why is it taking so long? Is it just we're in the middle of US holidays, and is that just kind of trying to get anything done in December, Jan in Australia? Is the kind of the flip of that, is trying to get anything done in July, August in the US?
No, it's not really to do with that. So the top line results that we're waiting for it's not something that we're doing ourselves personally. So this trial was conducted by and funded by US military resources. So that's the Uniformed Services University. It's a large study. So there's 866 subjects, so US and UK military personnel, and the protocol for it, which is available on clinicaltrials.gov. When you have a look at it, it's got not only the primary endpoint focusing on diarrhea. There's multiple secondary and there's also exploratory endpoints. So it's a data-rich study, and the quality review and the data analysis for that takes a long time. So hence the reason for the delay in reporting out that top-line data. It's good though. This rich data is very, very useful because it will inform us as to trial design for the phase 3 studies for Travelan. It's useful information before going into that end of phase 2 meeting with the FDA. I mentioned before that we've got 2 controlled human infection model studies showing different results for 3 times daily versus 1 time daily. This study is not a controlled human infection model study. It's in people that have travelled to high-risk regions, a field study, much higher relevance to a phase 3 study, and it's also twice daily. So we'll have dose ranging, and we'll have information on which type of patients it worked on, which types of bacteria it worked on. People in the field don't only get traveller's diarrhea from ETEC. There's other bacteria, but there's also viruses and parasites and all sorts of reasons that cause the traveller's diarrhea. And this study will provide us a lot of information about where it works, where it doesn't work, and greatly inform the protocol for taking Travelan forward into phase 3.
Okay. Steve, we have gone slightly over time, and I don't want to take up any more of your morning. Thank you very much for coming back and joining us once again. And we shall watch out for the full year result the back end of August. And as you said, there's a lot of studies coming to an end, or results coming out, between now and the end of December. So yeah, plenty of milestones for people to keep an eye on over the first half of 26 here.
Yeah, it's very good. We're quite excited about it, both the increasing revenue potential as well as the clinical milestones showing that platform technology of ours has got significant value. So thanks again for your time, and viewers, my contact information here. That's my personal email and phone number. If you have any follow-up questions, please feel free to reach out to me.
Thanks, Steve, and thanks everyone for joining the call this morning. We'll leave it there. We will have another webinar next week, and the details of that should be going out on Monday or Tuesday. It'll be Thursday morning next week rather than Friday morning, so hopefully you can join us for that. Just try and tie down the last 1-2 presenters and bits and pieces, and I wish everybody a good weekend, and we'll talk to you next week. Thank you.